Let's talk more about the markets, what we saw yesterday, possible impact from President Trump's tariffs. Joining us with her thoughts, Sylvia Jablonski, CEO and Chief Investment Officer at Defiance ETFs. Earlier we were talking, Sylvia, that it's difficult enough to even disentangle what the president's talking about or what the administration's talking about when they actually tell us what they're doing with tariffs, much less how quickly things change between now and April 2nd. So the market seemed to bottom last week, or had a good week last week. The S&P entered correction territory for one day, and now it's come out of that. Is it all related to tariffs, the on-again, off-again nature of it, or is this just happening with tariffs as a backdrop?
Good morning, Joe. I think that a lot of this has to do with tariffs, but more than that, it has to do with uncertainty. So what we know about the markets is anytime you have any kind of policy, whether it's from DC or otherwise, uncertainty about taxes, uncertainty about tariffs, the market doesn't like it. And what happens is investor sentiment starts to cool. You kind of get this going to the sidelines, a lot of selling of stocks activity. And, that's what happened here, right? So we just don't know. I think the market clearly liked the idea that tariffs were going to be targeted versus widespread. But to your point, we don't really know what that means yet, right? So that'll play out in the next couple of days, and I expect volatility to continue there. What I will say, though, is that markets like this almost all of the time end up being buying opportunities on these days where you get S&P near correction territory, in correction territory, NASDAQ in correction territory. This is how, long-term dollar cost averaging tends to play out if you're kind of a buyer on those days.
I guess it begs the question, is this just a rally from a tradable bottom that we saw that is destined to retest those lows and maybe go lower? Or do you think that you could, for example, buy today?
Yeah, I think so. March 13th, we hit that 5,500 level, right? And now we're right back at the 200-day moving average, and we're about 6% off of the February 19th high. So I still think you can buy today. Another way to think about it, though, is if you look at the S&P versus the X-Mag, taking out the Mag 7, versus an equal weight, it's underperforming the two latter options, right? So another way to think about it is you could go back into the market, but maybe look at the, other 493 stocks where you're outperforming the S&P. So you still have equity exposure that's been pulled back, but you kind of have that safety thread through the next, chunk of volatile trading sessions.
So if you don't do ETFs like Defiance ETFs, what names, you do mention a couple, you mentioned to our people, like what? Let's talk about them.
Yeah, I try to give you guys some interesting names that we're not talking about all of the time, and this could be in the long-term buy and hold, somewhat, speculative bucket. So what I really like right now are the quantum names. I like IonQ and Rigetti. Those names in the last few days or so, last week or so, are actually up double digits. And the idea here is that, AI came out of nowhere. We all thought it was a bubble. Maybe some of the prices got up to bubble territory, but nevertheless, you're starting to see practical applications and monetization. So quantum, I think, is the next AI, and IonQ is the next NVIDIA, if you will. And so it's pretty much like a quantum a quantum SaaS type of company, QAAS. Biggest clients are Google, Amazon, things like this. And basically, you're talking about a market that's thought to grow about 38% between now and 2028 as quantum becomes, a reality and a practical application to different sectors. So I really like those two names. I think they're interesting long-term buy and holds.
Okay. So IonQ. Okay, good.
IonQ and Rigetti, good quantum.
Yes.
Quantum.
Okay, good.